What if becoming rich actually made your life more expensive? Imagine waking up in a $2 million house, driving a $100,000 car, taking luxury vacations, eating at expensive restaurants, and never having to check your bank balance before buying something. It sounds like the dream. But here's the part. Nobody tells you. The more money you make, the more expensive your life can become. A bigger house means bigger bills. A more expensive car means higher insurance and maintenance. More assets mean more things to protect. And eventually, even managing your money becomes a business of its own. You can make $1 million a year and still feel financially trapped, because being rich isn't simply about how much money comes in. It's about how much money stays. And today we're going to break down the hidden cost of being rich and why some people who look incredibly wealthy may actually have far less financial freedom than you think. Let's start with one of the biggest reasons wealth becomes expensive: lifestyle inflation. Imagine you earn $50,000 a year. You probably live in a relatively affordable home, drive an ordinary car, cook at home sometimes, and think carefully before making large purchases. Then your income jumps to $100,000. Suddenly spending $3,000 on a vacation doesn't seem outrageous. You upgrade your car. You move into a nicer apartment. You start eating out more. Your monthly expenses increase. Then you make $200,000. Now the old lifestyle doesn't feel luxurious anymore. Maybe you buy a $600,000 house. Maybe you lease a luxury SUV. Maybe you start paying for private gyms, expensive restaurants, better hotels, and more frequent vacations. Your income doubled, but your lifestyle may have tripled. And this is where the trap begins, because once something becomes part of your lifestyle, giving it up can feel like losing wealth, even when you're still objectively rich. The problem isn't spending money. The problem is allowing your expenses to rise every time your income rises. Let's take the house. A wealthy person might buy a $2 million home. At first it looks like an asset, but owning an expensive house doesn't mean the house is free. There may be property taxes, insurance, utilities, repairs, landscaping, security, cleaning, furniture, and eventually major maintenance. A normal homeowner might spend hundreds of dollars dealing with an unexpected repair. A luxury homeowner could be dealing with tens of thousands. A roof needs replacing? Expensive. The swimming pool needs repairs? Expensive. The air conditioning system fails? Expensive. The bigger the property, the more expensive everything around it becomes. And there's another hidden cost: time. If you own a large property, someone has to manage it. Someone has to maintain the garden, someone has to clean the house, someone has to deal with repairs. At a certain level of wealth, you aren't just buying a house. You're buying an entire system that needs to keep operating. Then there's the car. Let's say you buy a $100,000 luxury vehicle. The purchase price is only the beginning. You need insurance, fuel, maintenance, tyres, repairs, registration, and depreciation. Depreciation is one of the biggest hidden costs because you don't always see the money leaving your bank account. You could buy a luxury car for $100,000 and discover several years later that it's worth dramatically less. You didn't receive a bill for that loss, but economically you still paid for it. And wealthy people often don't stop at one car. There's the daily car, the weekend car, the SUV, maybe a sports car, maybe a classic car. Now you're not maintaining one vehicle, you're maintaining an entire collection. And this is the strange thing about wealth. The more expensive your possessions become, the more money you need simply to keep them sitting in your garage. Now we reach something most people don't think about. Protecting your money can become expensive. When you have $10,000 in your bank account, losing it would obviously hurt. But there isn't an entire infrastructure built around protecting it. When you have millions of dollars in assets, the situation changes. You may need better insurance, you may need legal advice, you may need accountants, you may need financial advisors, you may need estate planning, you may need cybersecurity and stronger physical security. And if you own businesses or multiple properties, the complexity increases even further. At some point, managing your money stops being something you do casually or on a Sunday afternoon. It becomes a serious administrative operation. Then there's one of the biggest costs of wealth: taxes. Making a large income doesn't automatically mean you get to keep all of it. Depending on where you live and how your money is earned, you may face income taxes, property taxes, capital gains taxes, business taxes, and other obligations. And this creates an interesting difference between being rich and being wealthy. Someone might earn $1 million, but earning $1 million and keeping $1 million are completely different things. This is why wealthy individuals often spend significant amounts of time thinking about how their money is structured, not necessarily because they want to avoid paying taxes illegally, but because the way you earn, invest, own, and sell assets can have a huge impact on how much money ultimately remains. The richer you become, the more important financial organization becomes. Here's another hidden cost. Eventually your money can become complicated enough that you need other people to manage it. Imagine you own several rental properties, you have investments, you own part of a business, you have multiple bank accounts, you have insurance policies, you have retirement accounts, you have legal documents, you have tax obligations. You can't realistically spend every hour managing all of this yourself, so you hire professionals, an accountant, a lawyer, a financial advisor, a property manager, maybe an assistant, maybe an investment manager. Each individual cost might seem reasonable, but together they can represent a significant amount of money every year. This is one of the strange economics of wealth. Poorer people often pay with money because they don't have enough resources. Middle-class people often pay with both money and time. Very wealthy people can start paying other people to save their time, and time becomes one of the most valuable assets they have. Now let's look at a simple example. Imagine two people. Person A earns $1 million per year. Person B earns $250,000. At first glance, Person A is obviously richer, but imagine Person A spends $900,000 every year. House, cars, private travel, restaurants, staff, taxes, entertainment, luxury, purchases. At the end of the year, only $100,000 remains. Person B, meanwhile, lives on $125,000 and saves or invests the remaining $125,000. Who is actually building wealth faster? Person B. This is why income alone doesn't tell you how financially successful someone is. You have to look at the gap between income and spending. That gap is where wealth is created. There's also a psychological problem. Once people become accustomed to a certain lifestyle, they start comparing themselves to people even richer than them. A person with a $1 million home may feel poor standing next to someone with a $10 million mansion. Someone driving a $100,000 car may feel ordinary next to someone with a $300,000 supercar. This creates a strange, endless competition. You don't compare yourself to the average person anymore. You compare yourself to people above you. And suddenly $1 million doesn't feel like much. $5 million doesn't feel like much. Even $10 million can start feeling insufficient if your lifestyle requires millions every year. That's how wealth can become a psychological treadmill. You keep earning more because you keep spending more. So, what is the alternative? Real wealth isn't necessarily the person with the biggest house. It isn't necessarily the person with the most expensive car, and it definitely isn't the person who looks rich on social media. Real wealth is financial flexibility. It's having enough assets that you don't have to make every decision based on your next paycheck. It's having investments that generate income. It's having manageable expenses. It's having an emergency cushion. And most importantly, it's having choices. Imagine earning $200,000 and only needing $80,000 to live. You have a huge amount of flexibility. Now imagine earning $1 million but needing $900,000 just to maintain your lifestyle. You may look much richer, but financially you're far more dependent on your income continuing. That's the difference between looking wealthy and actually being wealthy. Being rich can absolutely make life better. Money can buy comfort. It can buy time. It can buy experiences. It can remove many financial worries, but money can also create a new problem. The more you have, the easier it can become to convince yourself that you need more. A bigger house, a better car, more expensive vacations, more luxury, more status. And eventually the lifestyle you built around your wealth can become the thing controlling your wealth. The real goal isn't to look rich. The real goal is to become financially free, because the richest person in the room isn't necessarily the person wearing the most expensive watch. It may be the person who doesn't need to impress anyone, the person whose expenses are under control, the person whose investments keep growing, and the person who can walk away from a paycheck without their entire lifestyle collapsing. Because at the end of the day, Wealth isn't about how much money you can spend. It's about how much freedom your money can buy. If you enjoyed this breakdown, subscribe to Outlay Costs for more videos explaining the hidden economics behind money, business, and everyday life.